David Lane from Ord joins me now. Great to see you, David. So we saw Wall Street end lower. What are we expecting locally today?
Yes, I think we'll probably follow suit here in Australia, taking the lead from the US, and concerns really around the world about the impact of the tariffs that are coming in from the US on China, Canada, Mexico. They've now started to take place. So, yeah, the world is coming to grips with the Trump policies, and also obviously the fallout from the political issues with the Ukraine as well. So it really does seem as if the US is becoming a lot more isolationist, and the markets are now starting to take that into account.
So what exactly did we see when it comes to US markets with the tariffs coming into effect in this session?
Yeah, so the US market was down, particularly the Dow Jones and the S&P 500. Nasdaq fared a little bit better, but a lot of the larger trading businesses were sold off as a result of those tariffs coming in, and also China bringing in some retaliatory tariffs as well, particularly on US farmers. So general discontent, I suppose, around the market, and coming off very high levels. So, both the US market and the Australian market last year had performed very well, so are at reasonably high levels. So we've come off quite a bit over the last few weeks. And in the short term, I think we're still quite cautious about the outlook. There has been some value that's appearing, and it is looking better from a valuation perspective. But just a bit cautious about how it will play out in the near term.
And we've seen Canada suggest that they may pull back some of their tariffs if the US, settles things down. However, they will put more tariffs on if that isn't the case. Trump has come out saying that he will then put further tariffs on Canada. So where does this really leave us globally?
Yes, you're right. It really does seem as if Trump isn't really willing to negotiate, and is playing hardball. So it really does appear as if there is a tariff war that's already started globally. From an Australian perspective, we are in a relatively better position than most other countries. We've actually got a positive trading relationship with the US. The impact for Australia, most importantly, is China, and how that impacts China, and the demand for Chinese goods will play through into particularly our resources stocks. So that's been a bit of a theme for some time, and probably will continue to play out. So I think we'll start to find our resource companies will remain under pressure for the near term as well.
The non-farm payrolls figures will come out in the next session. What would we be looking for there, given the current state of the economy?
Yeah, well, the US economy is actually in a really good position. So that's, I guess, the other impact of tariffs, is that they're in a position where their employment is very, very strong. So we're expecting another reasonably strong figure from that non-farm payrolls. Wages costs have been escalating, not to the extent that they were a few years ago, but they are still reasonably high, and they are at full employment in the US. So that's the issue that they have over there, is that their economy is very strong, so their inflation is actually still reasonably high, and the tariffs are likely to add to that inflation. So there's the potential that the tariffs could add about another 1.3% to inflation, and they already haven't got inflation under control. So I think the talk of a Fed rate cut has been a lot quieter over recent times, and I don't think we'll see that talk for quite some time.
And locally here today, what can we expect?
I think we will see more of the same, a bit of a weaker market. We will see an announcement today about the real GDP number for Australia. So that could be a bit of a positive, in that we're expecting year on year for GDP to be up around 1% for the quarter. There has been some positivity coming through as far as retail sales. They're still holding in relatively well, up about 3.8%, year on year. Although in the reporting season, many of the retailers didn't necessarily cite that strong sales growth. A lot were flat to slightly up. But the real thing in Australia that's been continuing to push our GDP has been the government spending, and that continues to be a bit of a boom. And heading into an election campaign, probably likely that we'll continue to see a lot of government spending on both sides of the political spectrum.
And David, you mentioned that you remain cautious in the short term overall because of the geopolitical uncertainty. Is that right?
Yeah, it is. We are cautious about the markets and think that there is the potential that we come off a little bit further. But then having said that, the volatility that we saw during the reporting season saw a lot of companies sold off fairly significantly. So we do have a lot of buy recommendations out there, and a lot of companies that are stacking up reasonably well from a valuation point of view. It's just a matter of that timing of whether you jump in now or wait a little bit. And I think strategically at the moment, our view is to wait a little bit further, because some of these pressures could push markets lower in the short term.